Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest in Mr. Kelley. Kurt is the president at Mobile Insurance and has been with them since 1996. Mobile Insurance has been ran as a family business since 91 and is the largest provider of insurance products to the manufactured housing industry in the nation. Kurt is also the founder and publisher of the Manufactured Housing Review, an industry publication dedicated to manufactured housing industry professionals. He is the past chairman and board member of the Texas Manufactured Housing Association. He's also the co-founder and managing member of the American Insurance Alliance, an association of manufactured housing specialty insurance agencies with a total premium volume in excess of $180 million. Kurt is a real estate owner and active manager, including investments in mobile home communities. He is also the managing member of Expert Climate Control, which is a commercial HVAC contractor in Texas. Kurt, welcome to the show.
Thanks for that long introduction. I think I almost fell asleep though during that stuff.
Oh, no way, man. We're happy to have you here. Maybe you can, start out by telling us your story and how you got into manufactured housing insurance of all niches.
I'll give a quick story on Mobile Insurance. Mobile Insurance was owned by General Electric in the early 90s, back when General Electric was the 21st of the mobile home industry, did most of the financing. And General Electric at one point in time decided to get out of the business completely, just exit it overnight. And they ended up, and my stepfather was working for him, and he ended up buying what little chunk there was of Mobile Insurance, which is Monogram at the time. And we started, my mom and stepfather started calling on mobile home parks then. And the time I was working as a lawyer in a small town, and they'd asked me to come join them a couple times. They finally, after some years, they wanted to retire and wanted me to come join them and buy the agency from them. And the last time they asked, I had just finished 2 week-long trials of divorce cases. So if you ever want to have a miserable life, become a divorce lawyer and get involved with human beings at the worst, lowest part of their life. And that's what I was doing. At the end of that 2 weeks, they called me on that Friday evening and said, hey, let me try to talk you into it one more time. Before he started talking, I said, yes.
Easy sale.
Yeah.
Wow.
So that's the story. So I'm a refugee from divorce law.
Wow. I did not know that. Learned something new. Kurt, we'll just dive right in here. What are the most important things that passive investors need to look out for when investing into mobile home parks? What are like the items that are scariest and provide the most liability?
Okay, I want to focus on something that's passive. So passive investor. If I was a passive investor looking at mobile home parks, I would be less interested in mobile home parks with high vacancy rates, because that's a lot of work, bringing in homes, selling homes, renting homes, filling them up. 2, I'd be really worried about communities with a lot of park-owned homes with a lot of deferred maintenance. Passive investors are not as good as maybe people like you that have a lot of connections, are good with rehabbing homes, fixing homes, know what to do, what not to do. They're not as good at that. So that's maybe 2 things to really watch for. The third one, here's a little trick. Go to that mobile home park on a Wednesday at 10 a.m. If you see a lot of working age men standing around doing nothing, it's a red flag, because working age men are kind of like teenagers with too much time. It's a bad recipe for issues, for just having a bad tenant base that just becomes difficult for someone to manage.
Love that. Yeah, those are some great tips. So say you're an active operator, for the active operators, what items present the most risk, and have the most claims every year in mobile home parks?
Some of those same things, even for active operators. If you're selling homes, think about this. If you're actually selling a house, that's a great way to fill a park. It's a great way to build equity. And some of our best operators do exactly that. But it's also a lot of liability because you've got to have a 40,000-pound object brought down the highway at 70 miles an hour that you're going to own. They're going to connect it to a couple of power sources. One, if you touch, you die. The other one that gets loose in your house, everybody dies. And they're going to set it up on blocks where you've got people crawling around underneath it. What could possibly go wrong? So that's something that a lot of people don't think about. You're involved in a business with a lot of heavy labor, heavy equipment, heavy moving. And then just overall with your things to watch for. And I get particularly worried. The worst thing I hate is when we have a client that has a problem that's not insured. It's a big problem. And so be careful about mobile home parks in low-lying areas and 100-year flood zones. Those are expensive to insure. So expensive that most people in those areas don't insure them. They just say, well, I'm just going to take that risk. So be real careful about that. In particular, you had mentioned to me when we talked not too long ago, what are you doing with all the pandemic stuff? How do you manage that risk? And the answer is right now, there's really no good way other than realizing it's out there. Insurance has not covered pandemics. The loss of income coverage requires some sort of physical damage to your property, and pandemics don't provide that. I read there was a Texas legislator recently that filed a bill that wanted to require all insurance in Texas to cover loss of income in pandemics. And the insurance association guys were talking about, I heard them talking about it, and said, we have to go talk to him and go, well, okay, we can do some of that. But the estimated loss with the pandemic was about $300 billion a month across the country. But there's a total of about $900 billion of total capital in insurance countrywide in insurance. So that's 3 months. If they'd done that, that would have been 3 months before all insurance companies are bankrupt. There's nothing left to pay any other claims. And by the way, there's no more insurance available. And by the way, if you can't insure it, you can't finance it. If you can't finance it, you can't buy it. The world comes to a stop. So the answer was really going to be, one, we don't know how to price it because we don't know, do we start it when the mayor says your town's closed, when the governor says your town's closed, when the president says your town's closed? And we don't know who's going to do it where. So it's one of those things that's probably some risk is just not a good fit for insurance.
Totally agree with you. I was looking at a video on your website, mobileinsurance.com or mobileagency.com. And I saw a video you did on like the top things that park owners could get sued for. And I think one of them was dogs. The second one was trampolines. And the third one was the employees, like just issues with the employees. So maybe you could kind of talk a little bit about those hazards and, the real risk that they pose to mobile home park owners.
Well, I would say, as a general rule, anytime your tenants are doing something that's risky, you're going to end up with that bill. You're going to end up with that ultimate liability. And it's because in most cases, most tenants don't have enough assets or liability insurance to cover a major problem if it happens. And so what ends up happening is that you end up sitting at the defense table alongside, let's say, the offending tenant. Let's say one tenant, we've seen this, one tenant raped another tenant. You would think, I've got no liability for that. I'm not for rapes. I never said I was for sexual assault. We've got nothing that ever said we want to part of that. It's not part of our business plan. It's whatever. But in those cases, we've seen juries go, well, we sure feel sorry for the victim. And we know the rapist doesn't have anything. And we know that Andrew's really, really, really rich because he owns real estate and he rents it out. So what's $2, $4, $5, $10 million against him? We'll assign 30% of the liability to him. Wow. And 30% of 10 million is $3 million. There you go. So now your responsibility for a legal rape. So I would say, like with the dogs, and I love dogs. In fact, my dog is sitting right there.
I think I saw him walk by. Yeah.
But you got to be real careful with tenant dogs. You can't control them. You don't know if they're trained. So when they bite other people, it's a problem. Trampolines are the same way. I love getting on trampolines. Those things are a lot of fun, especially if you've had a couple beers. But the problem is you can't manage them. You can't maintain them. You can't tell who's going to be on there. You can't tell who's going to be there at night. And by the way, Even when healthy people flop off trampolines, they hit their heads and their spinal cords. And in today's legal world, if you have a claim against you involving damage to a brain or spinal cord, the judgment is whatever you got. It's not 500,000. It's not $1 million. It's whatever you got. That's what the judgment is. Because I've heard the good plaintiff lawyers. Here's exactly what they'll say, Andrew. They'll say, okay, Andrew, I'm going to offer you right now $2 million for your ability to walk. Will you take it? No. What if I give you $5 million? I'm going to put you in a quad and a wheelchair. Would you take it? How about 50?
No.
That's exactly the same. I would say the same. No, it's not. Whatever it is, it's not worth it. So whatever number can magically appear in their head, that's the number that's assigned. So you can't bite off risk. Like dog bites. There's a lot of great pit bulls out there. I know people with good pit bulls are sweet dogs, but pit bulls account for 65% of all dog bite liability in the United States of America. And so as a park manager, you just have to stereotype that dog. And you have to say, we can't afford to have that dog in there at all. Now, if they've got papers that say that's a service animal or a support animal, make them supply all that information. That's going to give you some protection if the problem happens. But as a general rule, you can't live with tenants creating obvious and open problems that you're going to be dealing with.
Definitely. Let's see here. So what's the worst case scenario? A lot of investors in this space always ask about the tornado or the hurricane that just destroys an entire mobile home community. Maybe you could shed some light on the insurance side of that risk and how operators can offset that.
Okay, let's talk about tornado and hurricane exposure. And this is a good year to do it because I think last year we had multiple park owners that had significant damage with hurricanes and a few that were strafed by tornadoes, but nothing catastrophic. Okay, first of all, tornadoes are an easier risk to insure. It's an easier risk to buy insurance for. They tend to hit very small areas. So even if they do total destruction, insurance companies can handle that pretty well. Versus the cone of destruction on a hurricane can be 70, 80 miles wide versus a tornado that can be 80 yards wide. So hurricanes are more tricky from that perspective, and you've got a lot less insurance companies interested in insuring in hurricane areas. The other problem with hurricanes is they have that not only wind exposure, they've got flood exposure, and that flood exposure is exceedingly expensive to insure. So those are issues. So now, okay, let's say I want to make sure my community is properly set up against tornado or hurricane wind exposure. I've got investors. It's not just me. It's my aunt and it's Andrew Keel and it's Kelley, and they've both thrown in 10 grand in this deal, and they're not going to be happy if I lose their money. So what do? Well, you can buy loss of income coverage, which you should, because it also includes something called extra expense coverage, which will pay you to remove the debris of tenant-owned homes. And what you'll find is, even with tenants with insured homes that get money for debris removal for their own homes, they never, ever, ever pay for it. They just walk off. And so if you've got 80 homes in your park, all tenant-owned homes, and the debris from all of them there, the cost to remove that debris is $1,000 to $3,000 per home. So you've got coverage for that. And you also have extended liability coverage, income coverage. So once the park is cleaned and reopened, your income coverage continues until you have time as a good manager to come in and refill that park with either rental homes or some sort of government grants they're bringing in with people getting FEMA money to buy a nice down payment on a home. So you can do those things. So the other thing I would say is if you've got infrastructure in your community, which is either a building of some sort or above ground utility infrastructure, that will get destroyed often with those direct tornado hits. You might think, well, that's not likely to happen. And if it does happen, it's $40,000, $50,000. I can live with that. But the problem is a lot of times you're getting that exact same bill. At the same time, you're out of money for income. You've also spent money on cleanup. You've also spent money on everything else. And then someone lays a $50,000 bill on top of that. It becomes suffocating. That's not that expensive to insure. You can do it. We've got many examples of people that had bad tornado events and even bad hurricane events that have come out through the back end of it as good or better than they were, with maybe a better tenant base, better homes, better setup, better income, mortgages paid off. So if you insure it right, it's a manageable risk. So there's a lot of good reasons not to buy mobile home parks, but I would say tornado exposure is probably not one of them. Hurricane exposure, depending on if you're in a flood zone or not, maybe.
That's great. Yeah, thank you for that.
Yeah.
Let's see here. So on a typical mobile home park acquisition, what are the insurance policies that you recommend that an operator have? What are like the must-haves that every mobile home park should have on their real estate?
Well, generally you can buy what's called a package insurance policy. Not always, depends on the community. But a package in policy, it's going to include liability insurance, general liability, which is premises liability. Someone drowns on your property, someone's electrocuted on your property, someone dies of carbon monoxide poisoning on your property, they slip and fall and break their neck. They fall into a septic system and drown, which we had that happen this year. That covers that exposure, which is probably the number one thing. It also covers property exposures, like your office building, if you have that in the community, or if you've got a big improvement on a warehouse or a contents in there, and your loss of income coverage. If you can buy the loss of income coverage as part of a package, it's generally fairly inexpensive, maybe 1/3 of 1% of your income per year in most parts of the country away from the coast. So that's what you would start at. I also like tenant discrimination coverage. We're getting more of those claims where they won't rent to me because of my race, my sex, my sexual practices, whatever they come up with, not because they were a convicted felon who raped 7 kids. It's because they were Irish and they've got Notre Dame football gear and you can't stand Irish fans.
What do you think about cyber liability? Is that something that you see a lot of claims on?
Well, I would say this. When I started in the 90s in insurance, I think 95% of all of our thefts were physical. I think we're well past the point to where most theft in the United States now is electronic. And a big issue with community investors and real estate investors is you guys got a lot of cash. And the thieves have figured that out. And so they figured out ways to do what they call electronic wire fraud transfer, electronic fraud transfer of money from your accounts. And they'll basically mimic your account. They'll call your banker. They'll have it set up with an email for your banker to wire them $50,000, $500,000, $700,000 from your account. And it'll look exactly as if you did it. And if it's your fault, not the banker's fault, but your fault that it happened and your system was hacked, it could be your loss, not the bank's loss. So we really like, in that cyber liability world now, you can buy that coverage. In addition to coverage for people to hack into your system, steal all your tenants' information, and now you got to send a notice to everybody you do. Someone that hacks into your system and says, oh, by the way, we're not going to bring up your system again until you send us $100,000. So that's the second most prevalent claim with cyber issues. And you get people in there just like to mess your stuff up. So if you've got a computing system and you get the wrong software in, it may be gone. It may just be lost. And you can buy coverage to fix your software and even replace your hardware if it's so messed up that it can't be replaced. Those policies are, for a mobile home park operator, start at $1,200, $1,500. And I think it's a good investment right now for anybody with either a very large community or multiple communities. I think it's money well spent. I think it's probably underpriced right now. It's a good time to buy it. Although we're seeing a lot of pressure now for getting that electronic wire fraud coverage because insurance companies have figured out that you guys are the exact target of those thieves because you guys have all done something miraculous. You've collected capital and saved money, and now it's in a bank account. And it makes you one of the very rare people in the world who've done that, and they'd like to sure like a chunk of it.
Yeah, that's pretty scary. I mean, just to consider, you're trying to wire money in for closing or something, and it's very real. I've had some friends that have been compromised. So
there's been multiple people in our industry that have lost 6 figures. And here's how real. Here's a good tip for everybody on there. Call your banker today and say, you should never, ever wire anything from any of my accounts. In fact, I want it in writing, unless I or my vice president or whoever you else have designated is sitting in front of you. That's a good business practice. And it's a little bit hard on some people that do them every day, but you need to make sure you've got very specific protocols if you get sat outside that at all. Now, let me take my company, for example. I'm the worst possible risk because one, I've got a ton of cash in my account. And two, it's not mine. It's the insurance company. I've collected Andrew's money. I put it in my account and we have to pay it to the insurance company in 30 days. So I'm really ticklish about that. So we've got very specific protocols that have to be followed. In the last 2 years, we've had 2 instances where someone's contacted the bank claiming to be my team and wanted to transfer wire money out. And in both instances, the bank had called because of our demand that they do so to follow up and say, hey, why do you want to send $50,000 to Bert Jones in Saskatchewan? Well, we don't, is the answer. So do that today.
Yeah, no, that's a great tip. Let's talk a little bit, Kurt, about park-owned homes. It's the ugly duckling, in the industry. A lot of park owners will put the park-owned homes in a separate LLC and then own the real estate in one LLC. And then a management company altogether is a separate LLC or a separate S Corp. Maybe you can talk about park-owned homes and how to kind of shield some of that liability, because it is it's a necessary evil that a lot of park owners are forced to do until they can sell them off and make them tenant-owned homes.
Yeah, I think overall, putting park-owned homes in a separate entity, once you get past maybe 10 homes, maybe before that's not worth it. There's just not enough risk to justify another LLC, another set of books, another set of records overall. But after that, I think it's probably a good idea. And here's what you really get with an LLC. Think of an LLC as a self-contained globe. If something goes wrong inside of it, the worst thing it does is it destroys everything in it and implodes. But you don't lose everything outside of it. So I've got the LLC that owns the park-owned homes. I've got the LLC that owns the real estate. I've got the LLC that owns the management company. And I've got my house, my other investments all over here. The worst case you happen if you have the LLCs, you just lose in that. So I really like that perspective. From an insurance perspective, we don't really care if you own it in the same LLC or separate LLC. We can name them all in the same account. I think anybody that's got multiple parks probably ought to have a management company that is owned separately than the real estate owning company or even the park-owned home owning company, because management company have these awful little assets that are really nasty to deal with called employees. None of us would have any of them if we had any other viable option in the world. We would not have them. And by the way, employment lawsuits are the number one civil lawsuit in the United States, category of lawsuits in the United States right now. So get them out of your real estate. And the worst case is, okay, so Kurt said something about the way I was dressed today, and I've got a $10 million judgment against him. If I've got that in a management company, I go, all right, well, the management company is yours. You own it today. And by the way, I'm out of it, so I'm moving on. I'll start a new management company tomorrow. We'll reassign stuff, and we can do it. The same with park-owned homes. Here's how the park-owned home deal works. Now we get brain injury and spinal cord injury and carbon monoxide cases settled within policy limits. Because we go, okay, yeah, you can sue us. You can go for an excess judgment, and you can't own those 35 homes in our park. But if you own them tomorrow, you owe rent to our other entity in the amount of $400 per month per home starting tomorrow. So we're kind of happy about that. We didn't really like that much anyway. You'll own all that. You own us all that. And they go, well, slow down. We'll just take the $2 million of insurance.
That makes sense. So with the park-owned homes, say you're doing like a straight rental, do you need to have a separate bank account just for the park-owned home entity and collect the income through that entity and then pay the park out of that?
Yeah, you need to run them as separate little companies. You always same ownership and management, but you need to have separate books, separate bank accounts. You probably have money going back and forth. If you don't, you run the risk of a lawyer saying, well, it's just a subterfuge. They didn't even believe in their own company. They didn't even treat it as their own company. There's no rhyme or reason to it. So we're going to disregard that entity. It's harder to do that than most people think it is, but you can have that happen if you don't have your own tax ID number, bank account, et cetera. But if you do this, it's pretty simple.
Wonderful. Let's see here. What does the perfect mobile home park look like in your eyes? Kurt, as a insurance broker?
Okay, well, I'm going to answer that literally from my perspective. So here we go. So I want a park that's going to be the most expensive there is possibly to insure, because that's what I'm going to make my 12% on. So I want you to buy a park in Chicago where everybody sues everybody for everything. I want you to have a ton of old, used, manufactured homes that had no maintenance on them. And I want some significant lack of occupancy issues too. And I want you to have your own water system in an area that's known for bad water. So that's what I would say. So now if you look at it from Andrew Keel's perspective, I want a real community. I don't want any park-owned homes. I want 100% occupancy, and I want no amenities. That park is cheap to insure. It's easy to insure. It's easy to manage, easy to operate. It's also probably the most expensive one to buy. I'm guessing you guys would know that better than me, but I'm guessing because it's a passive investment with a lot less risk.
That is a great tip. We've been told amenities in communities like swimming pools and dog parks are really nice. Playgrounds are nice to add. Could you maybe give us a tip on which amenities are also not going to make our insurance costs go through the roof?
Swimming pools will cost you about $600 a year extra, plus the what's $3-4 a month extra to operate, whatever that operating cost is. So swimming pools are probably the most expensive amenity, and the one most likely to cause you $1 million liability loss. Because generally speaking, if anybody drowns for any reason in your swimming pool, it's probably policy limits. There's just too many things that just have to be perfect for it not to be the case. We've got out a few of them, but not much. Dog parks, it's an evolving risk. Insurance companies don't like evolving risks. They're asking a lot of questions. They're insuring them now, but boy, I don't know why you would want to get people and dogs together, because people and dogs, with dogs fighting and getting involved in the middle of them is a recipe for problem. I just rather have dogs on leashes walking around the park, not around each other, than in a dog park. The playgrounds, I would say that's the best thing. They look nice. They're low maintenance. I have decent equipment. They're inexpensive to insure. In fact, I've argued with my insurance companies, we should charge nothing for a playground, because that means now the kids are on the playground and not in the streets. And then as a consequence, I only charge a couple $100 a year for them. So that would be my choice. If I was a community owner, I wanted to put a nice amenity that looked nice.
All right. The playground is the winner. So Kurt, last question for you. What's your final piece of advice for investors out there interested in mobile home parks?
Be picky, do your research, buy what fits you, buy the property that fits you, buy the car that fits you, buy the motorcycle that fits you, the clothes that fits you. I would never, in my investments, I invest through other people. I don't have time to manage them. I would never have the ability or time to manage a park that had significant occupancy issues or a bunch of rental homes. That's just out of my skill set, out of my time set. So now there's other people I know. In fact, probably the most successful financially ones have all those problems, and they manage them well, and their return on equity is higher. Their cap rates are they're buying them at a higher cap rate, selling them at lower cap rates. They're doing much better, but they're uniquely skilled people with knowledge. So buy what fits you. And if you got a park in a flood zone or it's got a pollution problem, I don't think those are discounted to the extent that they should be to be viable investments. That's what I see.
Yeah, that's a great point. We just were under contract on a property that nobody knew it. The seller didn't even know it, but it was built on an old landfill. And as we discovered this and talked to Mike Renz, who is our environmental engineer, and talked to, attorneys, environmental attorneys, there's just a ton of risk. If 7 years from now, a little girl gets leukemia and somehow it's tied back to the landfill. So there's a lot of risks out there, right? But, everything, comes back to making sure you have your I's dotted and your T's crossed, and making sure your policies are covering, the risks you're taking.
That environmental risk can attach to you forever personally.
Yeah.
You can never get rid of it. It's like catching herpes, you got it. And no matter what happens, 100 years down the road, you could have that liability. So I don't know how you buy it.
Yeah, we had to pass. Pass. Well, Kurt, thank you so much for coming on. Really appreciate it. How can our listeners get a hold of you if they'd like to do so?
Boy, thanks, Andrew. I love being here. It's always fun to see you and talk to you. I usually see you in the gyms in the morning when we're at events together. You can reach us at our mobileagency.com, 800-458-4320, 800-458-4320. Or call me on my cell phone. If you're looking at one of those parks we're talking about and you're worried about it, give me a call and we walk through it and I can tell you if the risk match. 281-460-8384. Just put Kurt Kelley in there, problem mobile home park. And I'm the guy with all guys. I hear nothing but bad news. Andrew never calls me and says, today we collected all of our rent. Everything went perfect. The secretary came in and gave me a pat on the shoulder and said, man, you're smart. And I never get that phone call. I get to call them problems go back.
I mean, Kurt, you and I probably talk a handful of times every year, and I really appreciate your willingness to share and just shed light on the insurance side of things and making sure we're covered. So thank you so much for that. Really appreciate it. Thanks for coming on. That's it for today, folks. Thank you so much for tuning in. Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.